Trump Media and Technology Group Corporation, $11.54 USD, plus 0.47, 4.25% today. Closed on 28th of November, 5 p.m. GMT -5. Disclaimer: after hours, $11.66, plus 0.12. As of the closing bell on Friday, November 28th, Trump Media and Technology Group Corp. is trading at $11.54. We are looking at a robust intraday surge of 47 cents, marking a 4.25% gain. The momentum has not stalled with the closing bell. In the after-hours session, the stock has tacked on another 12 cents to reach $11.66. On the surface, seeing a 4% green candle on a holiday weekend feels like a victory lap for the MAGA trade. It feels like the market is signaling confidence in the administration's second year, or perhaps reacting to the broader Trump trade resilience. The expectation here is straightforward. Donald Trump is in the White House, his influence is paramount, and therefore his media company must be the ultimate beneficiary of his power. Investors look at this price action and see a vote of confidence in the political brand. But the reality of this move is far more calculated, far more mechanical, and frankly, far more strange than a simple political endorsement. We are not just looking at a social media company anymore. We are looking at a corporate entity that is undergoing a radical, real-time metamorphosis into something that resembles a crypto hedge fund bolted onto a broadcasting platform. The 4% move today wasn't driven by a sudden spike in ad revenue or a massive influx of new users to Truth Social. It was likely driven by the mechanics of the options market, specifically the expiry of the November 28th monthly contracts, and a growing realization that the stock is becoming a proxy for the entire cryptofication of the U.S. economy. When you peel back the layers of the 10Q filings and the recent press releases, you realize that buying DJT at $11 is not a bet on free speech, it is a bet on financial engineering of the highest order. Let's dissect the intraday action because the volume profile today tells a specific story. The buying pressure was consistent, not erratic. In the world of online investing, particularly for those of you watching the tape on Interactive Brokers trading platforms, you know that consistent bid-side pressure usually indicates a pinned strike price. Today was options expiry for many weekly and monthly contracts. The $12 strike was a massive battleground. Market makers who sold those calls had a vested interest in keeping the price below $12 to ensure those options expired worthless. The bulls, conversely, were trying to push it through. The close at $11.54 represents a stalemate where the price was pulled up by bullish flow but capped by structural resistance. This tug-of-war is technical, not fundamental. It creates a false sense of security. You see the green and think growth, but the tape sees gamma exposure management. I want to challenge the common belief that DJT is destined to go to zero because no one uses the app. That is the bear case expectation, that without user growth comparable to X or Instagram, the company is worthless. The contrarian reality you need to consider is that the user base might not matter as much as the balance sheet composition. DJT is pivoting. They are no longer just trying to sell ads to pillow manufacturers, they're building a digital asset treasury. The recent moves to acquire Bitcoin and the partnership with crypto.com to launch Truth Predict are not gimmicks, they are fundamental shifts in the business model. They are turning the company into a publicly traded vehicle for crypto exposure and prediction market speculation. If you are analyzing this stock using traditional price-to-sales ratios like you would for Apple stock, you are using a ruler to measure weight. It doesn't work. You have to look at this as a holding company for alternative assets. The volume today was significant, hovering around the 4.4 million share mark, which is healthy but not explosive. This suggests that while the retail crowd, the folks on the Robinhood app and SoFi investing platforms are still present, they aren't the only ones in the room. We are seeing what looks like accumulation in the $11 range. Institutions that run algorithmic strategies often buy in these quiet consolidation zones. They aren't buying the story, they are buying the volatility. They know that with Trump in the White House, a single tweet or a single executive order can send this stock up 20% in an hour. That option value is what keeps the floor under the price. It is not about the PE ratio, which is negative, it is about the event potential. Let's talk about the business itself because the transformation is jarring. The Truth Plus streaming service has officially launched globally, and the inclusion of Newsmax as a partner is a strategic play to capture the conservative media ecosystem. The expectation was that Truth Social would be a Twitter clone. The reality is that they are trying to build a localized, ideological version of Netflix combined with a Bloomberg terminal for the MAGA movement. By putting the app on Apple TV, Amazon Fire, and Roku, they are bypassing the mobile gatekeepers to some extent and entering the living room. This is critical because ad rates on connected TV are significantly higher than on mobile feeds. But the cost of running a streaming service is astronomical. Bandwidth, content licensing, server costs. These are cash drains. The Q3 2025 earnings showed a net loss of nearly $55 million. That is the cost of building this infrastructure. The question is, can they monetize it before they burn through their cash pile? And speaking of the cash pile, this brings us to the crypto-treasury strategy. This is the most fascinating aspect of the current valuation. The company has explicitly stated its intention to hold Bitcoin and other digital assets. In a way, buying DJT is becoming a proxy for buying a crypto ETF, but with a political kicker. With Trump's recent Genesis Mission executive order pushing for AI and data dominance and his administration's favorable stance towards crypto, DJT is positioning itself to be the corporate beneficiary of this policy shift. If the price of Bitcoin doubles, DJT's book value increases, theoretically pulling the stock up with it. This correlates the stock less with Facebook and more with something like MicroStrategy. For those of you managing Fidelity IRAs or looking for investment help, understanding this correlation is vital. You might think you're buying a media stock, but you're actually adding crypto volatility to your portfolio. Now let's address the elephant in the room, the Black Friday presidency narrative. There is a growing sentiment reflected in recent news cycles that the presidency itself is being commercialized. The Genesis Mission and the Truth Predict markets feed into this. The expectation is that this is unethical or unsustainable. The reality from a cold, hard market perspective is that it's profitable for the associated companies. Markets don't trade on ethics, they trade on cash flow and growth. If Truth Predict becomes the go-to place for betting on election outcomes or policy shifts, the transaction fees could be massive. Prediction markets are booming. Look at the volumes on Polymarket. If DJT can capture even a fraction of that gambling volume, the revenue picture changes overnight. It moves from a low-margin ad business to a high-margin transaction fee business. I want to pause here and ask you guys a serious question about this product roadmap. Comment below, would you actually use Truth Predict to bet on political outcomes, or do you think it's just a novelty feature? I am really curious if the retail base sees this as a utility or a gimmick. Drop a comment. Let's look at the risks because they are as tall as Trump Tower. The dilution risk is constant. The company has a history of funding itself through equity. Every time they issue shares to buy crypto or pay for tech, your slice of the pie gets smaller. The short interest remains incredibly high, floating around the 13 to 15 million share mark. This is a double-edged sword. On one hand, it suppresses the price. On the other, it creates the coiled spring effect. If the stock pushes past $13, a key technical resistance level, short sellers might be forced to cover. This is what causes those violent, sudden spikes we see in GameStop or other meme-adjacent stocks. But waiting for a squeeze is a dangerous game. It's like waiting for lightning to strike. The institutional landscape is also shifting. We are seeing very few traditional long-only funds, the kind you find in Fidelity mutual funds, taking large positions here. The reputational risk is too high for them. Instead, the institutional volume is likely coming from hedge funds and quant shops that trade the data, not the politics. This means the capital is mercenary. It will leave at the first sign of trouble. It is not sticky money. This explains why the stock can drop 10% in a day on no news. The mercenary capital just decided to move to a different battlefield. If you are using Interactive Broker's stock trading tools, look at the implied volatility on the options. It is consistently higher than the broader market. This tells you that the market expects chaos. It expects 5% moves as a baseline. If you are holding this stock in a Schwab Intelligent Portfolios account, although it's unlikely a robo-advisor would pick this for you, you are introducing a massive variance component. The beta here is not just relative to the S&P 500, it is relative to the news cycle of one man. Let's talk about the Genesis Mission Executive Order again, because it went under the radar for many. By directing national labs and private companies to collaborate on AI and data, Trump is effectively creating a subsidy pipeline for favored tech sectors. While DJT isn't an AI company per se, the tech in its name is not accidental. The pivot to TMT Plus and the tech stack they're building could, in theory, benefit from this push for American AI. It's a tenuous link, but in a bull market, investors love tenuous links. They connect the dots and buy the rumor. The reality is that